Mortgage rates need to come down. Mortgage rates need to come down. You have heard plenty of people banging that drum, and I'm going to share an article with you that sheds some light on logically why that needs to happen. So it's really a two-pronged message when people are telling you that rates need to come down. The first one's a little more obvious, that home buyers are struggling to keep up with high prices when interest rates are at 7%. So rates need to come down in order for more people to be able to afford housing. That one's pretty clear and obvious, but this second one that this article from CNBC really does a good job of breaking down is why the economic data suggests that interest rates need to fall. We're looking at the 10-year Treasury bond versus the interest rate on the 30-year fixed rate mortgage. Traditionally, the spread between those two is around 1.75. So that means if you had the 10-year Treasury bond at 3% return, you should expect mortgage rates to be around 4.75. But what happened during the pandemic is a lot of early refinancing, and the Fed themselves was actually a big purchaser of mortgage-backed securities. So we're in a little bit of the fool me once, shame on you, fool me twice, you can't get fooled again, as President Bush once famously said, in that investors are concerned about early refinances. Think about this. If you have a mortgage-backed security purchased here, you're expecting interest to be paid on that such that your returns stay here. But when people refinance out of those early, your returns come back down to here. So the secondary market is a little bit concerned that, okay, if the spread is here, this still makes sense from an investing standpoint, that I can get 4% returns here, but if I buy a mortgage-backed security, I can get 7% returns. That makes it worth the gamble. But the concern is if rates come down and make this spread a little more traditional, what would that be, 5.75 for interest rates? Well, now those investors have lost their expected returns on the mortgage-backed securities. So that piece is in the article, but I want to put a magnifying glass on that to just say this is part of the reason that our spread between the 10-year Treasury bond and the 30-year fixed rate mortgage is a little bit elevated, and we'll just have to see how that plays out. I hope that's helpful. It's a pretty heady article, but I think it does a great job of describing why we say mortgage rates need to come down. Y'all have a good day.